Damn, that's my second Diet Coke of the day. All right, welcome back to the channel, everybody. Thank you for tuning in. It's Mortgage Bro Science, the MBS. And what I wanted to go over today was gifts. And what is a gift, how much you can get gifted, and how much you can get gifted before the IRS comes in and takes mommy and daddy's money. All right. So, in case you didn't hear me, it is gifts. Gifts. All right, so what is a gift? All right, say you've been renting. You're paying rent $3,000 a month. All right, it's pretty hard to save some money unless you have substantially high income. All right, so maybe you don't have too much debt, but you're still paying rent. It's hard for you to save, and maybe you're on the cusp of putting 10% down versus 8% down, or on the cusp of putting 20% down versus 18% where you would still pay PMI. You can actually get a gift, okay, tax-free to help you buy a home. Either save yourself some money or just buy the home in general. All right. I will put up, hopefully Pat can edit this up here. What is a gift? How much you can gift. All right. If you go to the irs.gov and type in gifts, the IRS gives you all the information you need and what is acceptable in the form of the amount that you could get before the gifter or the donee, or donor, I should say, gets taxed. All right. The rule is for 2026, $19,000 per gift. All right, now if you're married, each one of y'all can get a gift of $19,000. All right, that's $38,000 that can go towards your home purchase. It's totally allowable, tax-free. After, say you're single, after $19,000, then that gift becomes taxable. Okay. Now I've seen some caveats here, and I got to be honest, I don't know the answers to this, and I don't trust just going to Google, Gemini, or Grok and going to AI. All right. But I've seen stuff where if you have a joint bank account, like for instance, me and my mom, we used to have a joint bank account because I opened my checking account when I was like 12. And it's kind of a pain to close it out and open a new one. So my mom is still on my checking, which is pretty funny. So I got to thinking, I said, what if my mom hypothetically just put $200,000 into our joint bank account and I use that to buy a house? Is that still considered a gift because it's a joint bank account? So I don't know. That's something to ask your accountant, preferably a CPA who can also do audit and let you know how the government's actually going to view that. That was something I just thought of, and I was like, I wonder if that would work. But that aside, another way I've seen it, or a workaround, which I don't know if this is entirely true, is I had a young couple. All right, they were married, and their dad, he's really well off, wanted to give him a gift of like $400,000. Okay, but he's pretty savvy. That's why he has the status of where he's at. Okay, he didn't want to pay tax on that. All right, so what he did was he actually just put himself on the mortgage, on the note. All right, as a guarantor. See, he's guaranteeing the note. All right, it was his belief that if he essentially co-signs and goes on the note, okay, I don't remember if he was on title and deed. He might be. However, he was advised that if he just co-signs, he doesn't have to pay tax on however much he gifts them funds. All right, so it's something to look into when you're going for a house. I would definitely talk to your accountant. Then here we go. It's gonna be like, oh, I'm W-2. I don't have an account. I use TurboTax or taxfree.us or H&R Block. Get yourself an accountant, because having somebody that can answer tax questions for you as you grow your wealth is absolutely priceless, right? One of my buddies I go to the bar with all the time. We watched the Masters yesterday. Shout out Ruddy. Shout out Rory. Right, 2 in a row. He just knows everything. He knows all the tax codes. He knows the ways around them. So it's really awesome if you don't have a friend that's an accountant. Find a cool, maybe a young accountant, depending on your age. Find someone similar to your age that you can relate to. And really buddy up to them because they know everything and it's freaking sweet. All right. So that's how much you can get a gift, right? It's $19,000 per. All right. After that, there's tax implications. It's right on the IRS website. We'll put the link and hopefully a snippet right up here. Pat will put that up. I sent it to him. All right. Now, what do you do when you get a gift? All right. All it really is, you just need a gift letter. All right. Now, usually an LOS system can generate this, but any lender you go to is going to have their own format of gift letter. It's super simple. All right. So you're going to fill out a gift letter. It's going to be signed by all parties. All right. We call that fully executed, signed by all parties. All right. With the respective amount that he or she is gifting. All right. And to whom and when and the address of the property. All right. So that's super easy. Now, what they also are going to want to see, they're going to want to see the monies exit the donor's account. All right. And enter the donee's account. All right. So then you'll need a bank statement, the most current bank statement, or activity statement showing the money's transfer. Okay. What we call this is an audit trail. We just want to make sure that, there's no mob type stuff coming on, right? Hence why you can't just put $100,000 cash that's untraceable. So super important to just know you have to collect bank statements. Often it's better to do this prior to starting the process, but I have to do it during the process. That's fine too. When I said do it before the process, remember, I only asked for 2 months bank statements. Okay. So maybe it was a lot of cash and you don't want us to know that it was straight cash because you cannot source it. It's pretty easy workaround. All right. Wink, wink. Might be fraud. I didn't say that. Okay. Just put it in and say you're buying a house in April and you kind of know this already, right? You're going to aggressively shop in April no matter what happens. My lease is up. I'm buying a house. I don't care what it is. All right. Put the money in your account in January, right? Because we're going to get February and March statements. All right. We don't care about January. So if the money's already in there come February, we're not going to say, hey, how'd this money get here? We don't care because it's been in there for 2 months. We don't see any large deposits or any large transactions. All right. So there's a lot of workarounds to sourcing these deposits. All right. And that's an extenuating circumstance because more often than not, you're not going to get a whole $100,000 wad of cash. Right. But it happens. All right. If it's not traceable, we can't use it. We veto that money. Then, you're SOL. Right. So that's what you need. You need a gift letter and you need bank statements. Okay. Showing money's exit and enter. So we'll do bank statements. Let's do that. Okay, in and out. All right. So who is an acceptable donor? All right. Usually they have to be related to you. Okay. Technically, Fannie and Freddie permit somebody that's not exactly blood relative to you, but say they've been in your life for a while. You can actually use this relationship as, say, family-like status and get a gift from them. But more often than not, you're going to get a gift from, well-off sibling, grandparents, or parents. Seldom you'll see like an uncle giving you money because, it's like, that's kind of weird. Where your parents might be deceased. Who knows? Anyway, gifts, pretty much they got to be related to you. There are underlying circumstances where they don't, but more often than not, you're not going to ask your friend for $20,000. I mean, you might, and if he gives it to you, that's a great friend. However, the gift is going to be probably from a grandparent. A guardian is a better word to say. Guardian, parent, legal parent, guardian, or a sibling. All right. So they want to see somebody with close family relation. All right. Now, here's where it gets a little complex. Depending on your LTV, okay, remember in the other video, LTV. Depending on the LTV, okay, I'll put the Fannie Mae right up here. All right. Again, Fannie Mae Selling Guide has all this information. All right. Although banks on a portfolio might have their own underwriting caveats, for the most part, everything's based on Fannie and Freddie Selling Guide. All right. So it permits, off the top of my head, if you are putting less than 20% down, but it's your primary home, you don't need any of your own funds. So you can buy a house with both gift funds and maybe a grant. Okay. You cannot get a gift on an investment property. You can get a gift. One more time. You can get a gift on a second home. All right. And then if it's more than 20% down, again, you can get a gift for that full amount. Right. So I don't know why they break it up into 2 boxes. I think it's more so if it's a 1-unit primary, you don't need to show any of your own funds. If it's less than 80% LTV, or sorry, I say greater than 80% LTV, meaning you put less than 20% down. So the better way to say it is if you're putting less than 20% down and you're buying, say, a 2-unit, all right, then you need to come out of pocket 5% of your own funds. But if it's a 1-unit, just a regular ranch, okay, you don't have to come out of pocket with any of your own money. You might not have your own money. It can all be from gifts, okay, or outside sources. All right, so it's important to know the caveats depending on what you're buying. All right, quick reminder, no gifts on investment properties. So remember when I said you're buying a house in April, get the money come January. This way, when you ask for 2-month statements, you don't see that the large deposit was given in February or March. That's another way, a good workaround if people try to build their investment portfolios. All right. So there's always the loophole poophole, we say. There's always ways around it. And this is why you really not only should you have a good relationship with your accountant, preferably a CPA, but unless you're really getting into audits, you don't need a CPA. You could be a registered public accountant. And there's like a site for that and everything. Oh, geez. Excuse me. Got a call. I'll mute that one. But yeah, so that's the skinny on gifts. All right, just remember gift letter. All right, you want to talk to your accountant based on tax implications. All right, and your parents or whoever's giving you the money will likely do that. All right, but in long, usually it's $19,000 per. If you're married, if you're single, then it's $19,000. After that, it becomes a taxable event, and you got to see tax implications accordingly. But just know you need a gift letter. It's totally fine if you don't have the cash, but someone else does because you can't take it with you. They want to see you have home ownership. Gifts are a great way to go. So like and subscribe. Any questions, drop a comment, and I'll help you out any way I can. Mortgage Bro Science, this is the MBS.